As we tracking the FTSE Asian 40 index, the earlier gain was kept right within at 11,000, 10,600 region. The subsequent pullback was pretty much within our expectation, as we expect it was going to be mild, and you can see the decline was pretty much within the inside the bullish flag pattern. And this so-called black pattern has ended following last Friday gap up move. So we expect the uptrend to continue again in tandem of the creation of the new higher structure right above the 20-day moving average. So the next technical target should be at 10,659, 10,820, and 11,000, while the support would be at 10,500. Right. For Malaysia, tracking back what we highlighted earlier, there is a inverted head and shoulder pattern. Not yet to break above the neckline, but there is a significant improvement as the KSCI has forming a new high-low structure. So this actually confirms the creation of the new right shoulder pattern. As for now, we expect KSCI to continue to trade higher, and with the next target, we actually pay at 1460 and 1500. Meanwhile, for small cap, the earlier target has been hit, but the upside was pretty much held within our designated resistance, first at 15,750. So the correction move or the corrective move still pretty much ongoing, but we think the downside again going to be kept within the 200-day moving average, and of course within the psychological support at 15,000, which is also considered would be the end of the wave 4. So we expect the major wave 5 going to unfold soon. Now for Indonesia, it was pretty much on the right in the middle of nowhere, but we think the decline going to be kept as buy interest actually has emerged within the immediate support at 6,735. Once we selling pressure normalize, we expect the index to continue re-challenging the upper resistance again. Same thing for IDX sector demonstration. The thing is, the pattern, if you look on the pattern here, is we call it a Gartley pattern. Gartley is a harmonic pattern, is a similar with the 8 wave, but slight variation. But this so-called Gartley pattern it is actually a bearish pattern. So what we highlight here, despite the uptrend set to resume, we think the upside going to be kept right within the wave D target will be at 1914. So be on the lookout if there any reversal move, particularly within the upper resistance region. For Philippines, it was quite interesting. We expect it trade much more lower, but the downside was pretty much kept, and the index has created a new right shoulder. So the so-called inverted head and shoulder was validated after the index closed above the 200-day moving average and also pattern neckline. So all in all, we think the upcycle has started, and the Philippine index set to trade higher, with the next target is actually paid at 6815 and 7,500. Meanwhile, for Philippines, industrial index, the uptrend also set to continue after the stock break above the so-called falling wedge pattern. So the next target will be at 9720 and 10,000. For STI index Singapore, the earlier what we call that the index is actually pretty much traded higher right within our expectation, but did not break above our immediate resistance. Actually, the pullback was minimal. You can see buying interest again re-emerged within 200-day moving average. So we believe the index could continue re-challenging the upper resistance again with a target at 3330 and 3450. And then for IS REIT index, the bullish flag pattern has still ongoing, but could be ended soon, as we expect the supportive trend structure to continue extending the current gain. So we put our target at 1,200 and 1,250. For SET Thailand, the earlier the index failed to create a new higher structure, but instead continue to decline further until the selling pressure start to normalize right within the major low. You can see for the past 3-4 days there is a multiple rejection within at the lower candle. Buying interest start to emerge again. So we think the SET index is right for technical rebound, at least near term. Meanwhile, for my index, it's still pretty much on the downtrend. We're seeing a slightly easing in terms of selling pressure, but the upside likely to be gapped because we think the technical rebound is likely to be temporary. And then for last but not least, it would be for Vietnam. the index continue to trade higher but on the slower pace, so we expect the consolidation will be more on the upward consolidation. That means gradual move in the upward, with the momentum still pretty much positive but quite weak. Same thing with the HNI index. The consolidation continue within the so-called tropical triangle pattern, and as for now there's no what we call that significant improvement in terms of technical reading that could pinpoint that the index could trade higher or lower. As for now, trading volume has been eased, so we expect the sideways to continue at least in the near term.